good evening, everyone. Thanks so much for joining us. I am Bea O'Carroll. I am the co-founder and CEO of Reciprocity Trading, which is a boutique OTC desk in the digital asset space. I am super excited to be part of this panel, Investing in Digital Assets, Leading Investors Share Their Secrets, that is sponsored or hosted by flovtec. I am joined by some old friends and new right now, who I will let introduce themselves. So why don't we start with Emanuel?
Sure, my pleasure. Thank you, Bea. So my name is Emanuel. I'm one of the co-founders and the chief investment officer of Fluff Technologies. We are a Swiss quantitative investment firm with the purpose to unlock digital assets by providing liquidity. Myself, I spent most of my career so far in quant trading, most of it actually in the traditional world until late 2017, early 2018, actually. I made the move to blockchain or DLT and basically never looked back since. That's me.
Great. Thomas?
Sure. Hi, everyone. So I'm head of Switzerland for Diginex, which is a global corporate headquartered in Hong Kong. The company was started in 2017, really with the broad vision of allowing for broader adoption for digital assets. Very institutional by background, building up the different kind of market infrastructure required for this, as well as investment solution. I myself, similar background to Emanuel, in the sense that I'm based in Switzerland and I've been on the asset management side for 20 years, mostly looking at fund allocation. That's it.
Thank you, Thomas. Mona?
Hi guys, so I also have a traditional background in finance. I started my career at Goldman on the trading floor. I was a market maker for anything from very highly illiquid stocks that traded similar to crypto to very high liquid kind of stocks that traded, that we had to price billion-dollar blocks in sometimes. So I did 15 years in traditional finance, nearly 15 years in traditional finance. The last stint I did was trying to launch my own long-short equity hedge fund. It was pretty small in size and opened my eyes to the operational and administrative inefficiencies in finance, which kind of eventually led me to blockchain. In 2016, I started to learn a lot about Ethereum and smart contracts, and this kind of led us to have the vision to build the first on-chain asset management infrastructure, which is completely automates the administrative and operational function whilst keeping the benefits that crypto has to offer you. So you can now invest in funds while holding full custody of your assets. You can automate the operational and administrative stuff. That was the Melon protocol. And my newest company, Avantgarde Finance, is now the lead developer of the Melon protocol and also building kind of applications on top of it.
Fantastic. And last but not least, Ray.
Hi, everyone. So similar to the others, I come from traditional finance. I started looking at the space in 2015 as part of a family office. Back then, we're quite interested in and actively investing and co-investing in fintech deals in Europe, and stumbled upon the space, started researching the space and decided to launch L1 Digital, co-found L1 Digital in 2018. L1 Digital is a Zurich-based advisor, advising currently a crypto fund of funds, but also co-investing with some of our partners and investing directly, and solely focused on crypto and blockchain. That's who we are.
So this is a fantastic panel. I want to thank flovtec again for organizing this for us. I think it's pretty powerful to have representatives from all different areas of our ecosystem: liquidity provision, investing, infrastructure, exchange, market infrastructure, and active management. Contact information for all of the panelists will be displayed at the end of the broadcast, so you'll be able to get in touch with them. And if you have any questions while we're talking throughout the conversation, feel free to drop them in the chat and they'll be forwarded to each of the relevant panelists as you need to. And if you'd like to rewatch it to get even more gems of knowledge dropped on you, it will be on the flovtec YouTube channel, and as well you can access it through the Singapore Blockchain Week GoToWebinar page. So now, let's get into it. Let's get some juicy secrets out of our panelists today. Mona, let's start with you. What's kind of one secret pro tip, piece of advice? I mean, you've been kind of, this is your second iteration in the blockchain and digital asset space. What piece of knowledge have you learned that you'd like to share with the audience today?
Oh, a lot. I don't know. The space moves very fast, I guess. I guess kind of having any kind of, in our first iteration, we had a very kind of rigid, fixed roadmap that we were fixed to in terms of building. And I think back then that was fine. There wasn't much going on other than, 5 or 6 projects building on Ethereum in 2016. And now, there's, I don't know, hundreds. So, so things are changing very fast. It's a very exciting time. Very hard to stay on top of everything. And so I think keeping an open mind and keeping some flexibility, both on the investment side and on the development side is really important because there's so much stuff happening. Another key lesson actually that I just thought of is, I've watched, I think I'm one of the first, I speak probably on this panel more for the decentralized finance side of things. Because I think I'm the only person well, actually that's not true. You're all kind of involved in somehow, but I think I'm probably the most deeply, involved person on that front. And I think that another thing that I have learned over the last few months is that there's very few people in DeFi with extensive and deep financial experience. And so just, buying into the latest hype is not always a good idea, but actually doing your due diligence with someone or some party who has financial expertise. And by the way, that doesn't necessarily mean someone who was a trader. Most of what I learned about finance was actually when I had to do the operational administrative, or let me rephrase that. Most of what I learned in terms of the benefits of DeFi and kind of having such a strong view on why decentralized finance is so powerful, that knowledge came when I actually tried to launch my own small fund and suddenly went from this large institutional world to this very tiny startup and had to actually figure out myself how the engine of finance works. So I think knowledge across the whole stack, back office, middle office, and front office is really important in terms of determining what technologies, what does and doesn't make sense. We see a lot of technological expertise in DeFi, but I don't think we see a lot of like the finance-y expertise.
Interesting. Ray, building on that, how do you evaluate the investments that your firm is about to take? And like, what kind of, do you have any secret sauce that you deploy or things that you help you while you're evaluating such a fast-moving kind of environment?
Yeah, secret sauce, no, I'm sure I don't. And whether if I had one, as Mona mentioned, it's moving pretty fast. So my current secret sauce is not going to work probably 6 months from now. So I think just keeping it really general, it's a really tough space actually. It's not easy. That's what I've learned. And I knew from the start that if you look at the space, most of it is a big part of it, 90% plus, is complete garbage. And to access quality and work with quality partners is not a given. So we can all agree that this space has a lot of potential, but you could spend the next 5 years in the space and that space works out and actually disrupts many sectors, and from an investment perspective completely miss out on the essentially return nothing. So implementation is really key, and I think if we the approach of assessing a manager or a co-investment or a direct investment, it all boils down obviously to the team, which is what is the common denominator across anything that we do in investing anyway. But I can tell you that things, so of course we've got experience from the traditional side of things, but this space is a little bit complex and moves at such a fast pace that we learn new things every 6 months, and we're obliged to be agile and change our approach. Meaning that the main goal here is seriously to survive all the challenges that we're going through, because we know that this space has a lot of potential, but implementing is really, really difficult. And I have to say that we're learning all the time. I'm not being very positive. I'm just being very realistic and very honest about it. It's really tough. So those are my learnings. I can't tell you what I've learned because it might not matter in 6 months. I think what matters is, will I be here in 3 years, and will I be able to grab a part of that opportunity? I think that's what matters. I'm going to do my best, but not sure it's going to work.
Very honest take. I can completely relate to that. Thomas, what do you think? Because you are actually building one of these platforms. So Diginex has the market infrastructure sort of exchange piece. It has an asset management piece. And I believe it has like advisory kind of and sort of more bespoke product lines. How do you, when Diginex is thinking about the business and the markets, how do you guys position yourselves? Do you have any sort of tips or things that you've learned along the way that you think would be helpful for the audience to hear?
Sure. I mean, essentially, it's all agreeing in a sense about what Mona and Ray mentioned, is that on one end, you want to keep the flexibility to tackle the current opportunity set, but the long-term goal is to survive and to make that space kind of broadly capable of a broader adoption by the bigger audience. So ultimately, we're targeting the institutional audience. That's why all the solutions we're providing to the market are being kind of tailor-made for a regulator, for big institutions from the beginning. But at the same time, when you look from an asset allocation perspective or from a product perspective, if it's on the exchange, if it's the custody design, or if it's similar to a fund of fund, you also want to make sure that you can somewhat tackle the current opportunities that are at play. And I think only people that have like 15 plus years of experience, like people on this panel, can really balance the two forces at play. Too often we're talking to managers or prop shops that might have a great idea, and as we mentioned, that great idea might disappear in a few months from now. But ultimately, you need to be able to sustain that space for the next 3, 5, 10 years plus. And I think, the lessons learned really is that, one, you need to keep that flexibility, but at the core of the business for us is really about kind of, the rules of the game, the regulation and the setup, the appropriate setup. And that's from the regulation perspective, but also from the market perspective. Clearly we're not as expert in DeFi as Mona is, but we've seen very, interesting / scary things over the last few months on the DeFi space, to say the least. And from an asset allocator perspective, you're intrigued because you see things that on paper look very attractive, but it's all about kind of figuring out how to get access to it and ultimately to preserve the assets and the risk for your clients.
Interesting. Emanuel, from your perspective and your transition into the digital asset space with flovtec, what have you noticed that if you could have told yourself this like 2 years ago or 3 years ago would have saved you like a ton of heartache?
Yeah, I certainly can relate to what has been said so far in the panel, in the sense that things move very fast, and there's kind of most of it is really the startup nature. Like all of our team basically comes from the institutional world, so we had some expectations basically on how things might work. I don't know, in terms of connectivity to exchanges, for example, etc. And you have really to, at least for the time being, leave this behind you in order to have this agility and flexibility to cope with all kinds of different solutions or situations, I should say. That being said, something that served us well so far also is to carry over the experience that we gathered actually from the traditional world. And here, to give you one example to illustrate this is, as I mentioned earlier, we do deploy systematic trading strategies. So in terms of kind of secret, I can provide one example here. everything we do is fully automated, and then we do separate our strategies into two groups basically. So there's liquidity provision on one side and trend following on the other. Now, some people might actually focus on just one group, but here again, tapping into our experience from traditional world, it really makes sense to look at both together, jointly, all the time. Obviously, most people immediately get that liquidity provision is about sideways, volatile markets where you benefit most, and trend following is more about large directional moves where these strategies benefit. But really, the symbiosis basically between those two groups goes much beyond that. For example, there's the trading fees, right? Which is, there's fierce competition currently in this blockchain world about who gets the liquidity. So obviously trading fees is an important part for our side, and we're happy to work with exchanges to find the best deals there. But basically, by having liquidity provision strategies, usually the volume is quite high that you produce there, and hence you reach good deals with the trading venues, which then benefit also the trend following strategies and actually allow strategies on the shorter term trend following, for example, which would not even be possible without such low fees or even zero fees basically from time to time. That's one additional angle. And maybe yet another one is the information exchange that you have between those two groups. To give you an example, for liquidity provision strategies, you naturally have to look at the order book quite intensely, basically. And judging by its dynamics, and this is also something that we carried over from traditional world, you can judge how many informed traders there are in some specific market, basically. Informed traders being defined as actors who behave as if they knew where the right or the fair price is, basically. And having this information is actually very helpful as well for longer term strategies in order to select which markets, for example, you want to be active with, and when exactly it would be more, when it would make more sense to basically take a position or actually just rest on the sidelines. So this just to illustrate that basically, while we think we have to be very agile in this new world, tapping into the experience from traditional world, I think brought us so far where we are today. And I think to Thomas's point previously, some actors indeed without such experience have had a very rough time in March this year, for example. Yeah.
Let's not talk about March. Let's just move swiftly on. So it sounds like there's a couple of repeated themes here. Number one, everybody needs to survive, right? This is a brand new market. We're all trying to figure out what the niche is. How do you ensure that you've got some sustainability here? I think you need to keep one eye on today and making sure you can keep the lights on while you're looking to the future to see how do you build this business. In such a fast moving market, I mean, I think all of our panelists have said how quickly things change and how it's like you just don't even know what it's going to look like in 6 months. I'm just going to open this up to whoever wants to answer it, but like, how do you think about your tactical plan? So you've got like a strategy, you're trying to figure out a roadmap. You're obviously, all of us are building our companies to ensure that we're going to go forward for the next few years. What are your tips on like, how do you keep that balance, and how do you set your priorities for, okay, what do I need to do like now, this month, this quarter, by the end of the year, and then how do I build this out? Like what are your priorities? How do you think about that? Anybody?
That is such a, sorry, I'm going to just jump in. That's such a good question. I think you just have to, I mean, in our case right now, we're very driven by our users. So we have this kind of roadmap. We have this list of things we want to achieve in the next 3 years. And we just prioritize those things based on where we're seeing the most demand for our users. So what we feel right now is, for whatever reason, recently there's been a lot of hype in DeFi, and people want to jump in, but certain things are holding them back, whether it's usability, whether it's certain features, whether it's a regulatory information they need or reassurance, whether it's better order routers, or there's a bunch of reasons. And so like we have a system for collecting all of that information and then saying, right, okay, it sounds like, this issue is coming up a lot, so we're going to have to squeeze this into the next release, and we're just going to have to figure this out. We weren't planning to figure this out until next year, but we're just going to have to bring it forward and either squeeze it in or push something else back and just kind of reprioritize. So it's really keeping an open mind. I think putting any kind of roadmap in stone is hard, but I think having a general idea of where you're going in the next few years and then kind of reprioritizing shorter term goals is possible, if you want to build an infrastructure that's going to be around for 10 years and not just for the hype cycle.
And that is one heck of a cycle these days. Anybody else?
So maybe I can say a few words that are more general. So the way, at the end of the day, what matters for us is, as investors, is performance and keeping our investors happy. And delivering what we initially promised, which is goal number one, long term. We believe in the space, but we want to make sure that we, at the end of the day, have exposure to some of the biggest winners in the space, while at the same time surviving those, super aggressive and difficult bear markets, right? And so the way we do it is, number one, we approach it the way we've approached it even outside of that space, which is to work with great partners. Just to give you an idea, partners can take you really, really far. So as a family office back in before blockchain, we started becoming quite bullish on fintech for obvious reasons. And we very quickly built a very quick network and used partners to get access to co-invest in companies like TransferWise, N26, iZettle pretty early, and capitalizing on those investments as we speak. So we were nobodies in fintech, and we're able to access those deals. And essentially we're trying to replicate this in blockchain and the space. So access is important. As I said before, what matters is how you implement that investment strategy and who gives you access to the right companies, projects, etc. And from a risks perspective, as an investor, diversification is the true free lunch, but it's very, very difficult to achieve. And I think, and I'm not yet sure, but I think that it is a tool to keep you in the game. Essentially, when everything gets smashed from a mark-to-market perspective, similar to March, you're not allowed to capture the entire downside. You need to cut that downside, and there are approaches out there that enable you to diversify and stay in the game and keep your investors from giving up, essentially. So it's very general, but yeah, that's the idea or philosophy behind what we do.
Maybe following up on that, in terms of how to balance indeed kind of short-term opportunities, maybe with the longer-term vision. And one thing that we came across and hopefully will continue to come across in the next couple of months is that there seem to be actually a lot of opportunities, however, which might seem good ones at the beginning, but actually when you look into it, they cut corners quite a bit and might be detrimental in the long term. So specifically, we operate as an asset manager, meaning that we don't deploy our own capital. And this is not the traditional way to provide liquidity, actually, in different shapes and forms. Hence, in a lot of our discussions, actually, people ask us, oh, but can we structure it something like this or just slightly different, etc. And it's tempting because obviously it's new business, a way to grow, etc. But so far, we and this is what we will continue to do, is basically really stick to our principle in the long term, and hence this this decision to say no to some shorter term potential opportunities if they don't match with actually your vision in the long term. That's something we was very helpful for us, at least so far, I must say. So it helps keeping your view on the long-term vision and not try to deviate too much, even if it sounds very appealing on the short term, basically.
Yeah, no, I think I couldn't agree more with everything that had been said, both on the product side, more from probably Mona, and from the investment or the opportunity set side from Ray and Emmanuel. It's funny, if you look at the internal discussion we're having, for instance, when I have my guys on the exchange side talking about on the sales side, they want to provide all the solutions that everybody's looking at right now. And then you're talking to the tech guys or people that are designing the risk and the liquidation engine, and they want to take the time to make sure that the release is sound and solid. And that's ultimately what's going to make the difference on the medium to long term basis. So I think keeping that equilibrium is extremely tough. You see it from what you deliver to the market, i.e. on the product side, and from an investment perspective. I mean, we've seen it in March, but we've seen it with all the short-term opportunities that mushroom here and there every few weeks. I think if you can build up the proper infrastructure as a hedge fund, as a prop, or as a liquidity provider, once you have that infrastructure, then your capacity to be nimble and to quickly address each one of these potentially short-term lived opportunities in a risk-managed framework, that's going to make a huge difference. But until you've reached out that level, which very few have, to be honest, in terms of, I mean, there's a lot of prop shops over there. But ultimately, if you look at it from an institutional perspective, in terms of risk, in terms of reconciliation, in terms of understanding where your balances are, et cetera, only a few proper shops exist. And those ones will be the one which we believe will have the capacity to grow in size and actually be the big winners of that business when it grows in general. I think it's really where we want to keep an eye and basically gather to these type of actors, and also make sure that the ones that are following behind have the right solutions and providing them with those solutions. I think that's the position we're trying to have in this market.
Okay, great. So it's been global pandemics and social unrest aside, it's been a very eventful year in our space in terms of news. We've had the Bitcoin halving, we've had Paul Tudor Jones coming in on some Bitcoin futures, we've got central bank digital currencies, yield farming, all kinds of cool stuff going on in DeFi. When you are all having your coffee on Saturday or Sunday morning and you have your precious 15 minutes alone to kind of just catch up on the news and events of what's going on, what really grabs your attention? Like, what is either in the news that article you're like, yep, I need to read this to the end, or I'm going to listen to this podcast, or conversely, what has not been in the news that's on your mind that you think really deserves to get some more coverage?
I mean, one thing that is certainly on my mind, which I really look forward to actually a couple of days off to catch up with, and here I think some other panelists are in a way more fortunate than me, is the DeFi space. Basically, we're very focused on basically the decentralized trading venues, which is the space we come from and which we know best. It's kind of our home turf, so we're at ease there. But all these super interesting developments in DeFi, specifically also, for example, decentralized liquidity provision with these different protocols, etc. That's certainly that I personally think is something super interesting and I would like to spend more time on actually. We started to look at one or two solutions / protocols, but it's so interesting. I certainly would like to devote more time to that in the next couple of weeks.
Yeah, I agree. That is absolutely fascinating. I just wish, for me, I need to figure out how do we bridge that gap, right, from all of our traditional worlds. Like how do you actually trade on a DEX? But that aside, Ray or Thomas, what do you think?
Well, I think for me there are probably two elements from just the market functioning effect. I think clearly the missing piece is the PB role, and we all know about this, and the netting, etc., and more kind of efficiency in terms of control and balance sheet efficiency. So I think that's clearly something that we're paying a lot of attention to. There are different kind of forces there that are different solutions that are being promoted by different players. It's extremely difficult to trying to figure which one will be the favorite. I don't think there's going to be just one. And you're trying to get a sense of what kind of the network effect will be around some of these promoters of solution. I think that's going to be a game-changing event. and it will probably come with regulation at the same time. It's impossible to give like timelines, but I think that that's clearly something where we're trying to get information from the direct discussion we have, from the very techie side to the more kind of traditional kind of asset management side. And that's probably where I'm paying most attention, in all honesty. DeFi, I 100% agree. It looks fascinating, but scary at the same time. But it's clearly something that I'll pay more attention on the Sunday night than in the Sunday morning.
So the part of the ecosystem that is on my mind, and I just don't see any progress, and I think is really, really bad, are service providers that are active in the space. I'm talking as around asset management within crypto. I think so. I'm not saying that you know that once the service providers that are well known in traditional markets will move in, things will be solved. I think things will be probably better, but still pretty bad. Let's be honest about it. But I think service providers, I just forgot that this is recorded, but yeah, they're not doing a great job, and there isn't enough quality out there. So, you know, they either need to get their act together, or you know, get more competition within the space to service institutional investors, or else it's not going to go anywhere. And they know who they are. So, but.
Yeah, I guess I can go next. So yeah, the stuff that's I mean, I have to admit, I stopped reading the news a long time ago. I just find it focuses on such irrelevant and uninteresting things, and it's very repetitive on certain subjects, and just misses out subjects that I find very interesting. So in general, I don't remember the last time I actually logged into a news website. But the things that I would like to see, the things that I generally am researching now or look for information on, are things related to our infrastructure. I think we're thinking about that 24/7. Things we're specifically interested in recently are scaling solutions. Gas prices on Ethereum have been painful for anyone who's building on-chain solutions. We're seeing the friction hit on trading. We're seeing the friction. Well, actually, the good news is the setting up a fund on Melon increased 5-fold this month, and we're seeing the highest number of new funds ever created. So on that side, it hasn't created any slowdown. But on trading, it's definitely, if you're trading a small order, but your gas fee to Ethereum is, you know, 20% of your order size notional, it's just not, there's no point. So I'm very interested to keep up on the progress. I'm watching what's happening in the roll-up space. Diversify is approaching it one way. Loopring is with Starkware. Loopring is approaching it a different way. So we're keeping a close eye on that. We're looking at kind of, or keeping an eye on, although I think it's still way too early to take any firm conviction on that, but other blockchains that are more scalable, like Near Protocol and Polkadot. But you know, we're sort of having to figure out the near term too. You know, we need to solve that. So I'm also interested in things like the gas token, which potentially could serve as a hedge to our fund managers and hedge against the volatility of gas price. And just basically focusing on the news flow that we need in the short term.
Fantastic. So I think we're hearing like lots of themes coming up over again in different ways. Innovation, product development going at the speed of light, infrastructure, service providers that need to be able to keep up. Like actually to be able to jump the chasm from the traditional world to this new world of trading digital assets and asset management and infrastructure. We need traction, right? So for us, it's like, yeah, there's all this stuff happening, and how do you keep up with it, and figuring out what are we doing today, and what are we doing in 3 months, what are we doing in 2 years? But we really need to get traction as a space and as an industry, right? So this is a little bit of of an off the wall one, but if there was one person, living or dead, that you could pitch on either your business, your product, or digital assets in general over a coffee or a beer, very informally, who would it be and why?
Central Banker of Lebanon, not the current one because he's a crook, but the next one, hopefully.
Why?
Because it's the only way out for our country currently. It's the way out. I think the space could, you know, today you have a problem. I mean, for those that don't know, your $100 that are in the bank in Lebanon are worth 20 cents, and they're locked. So there's no economic activity simply because you know, if I want to buy a car in Lebanon and I use my Lebanese bank account, the one who's selling the car is not going to accept my monopoly money, right? I mean, my lollers, we call them. So essentially, I think to spur activity, you need to build a separate system, a fresh system where trust is the trust issue, which is a major issue for us, is resolved. I tried to convince, and I nearly convinced a high-profile project in the space to get involved, and we agreed that he would get involved if the rumored central banker would take office. That didn't happen, but I'm deep serious about this because it would help my home country, and I seriously believe in it. So that's all. But
That's a good one, Ray. I like that.
That, yeah. I think that speaks to a lot of why all of us got in this space in the first place.
Yeah, I guess I would, I mean, like mine doesn't sound as powerful as Ray's now. I feel like I should have gone first. It's hard to meet that one, but I guess I was thinking, I feel like what we're doing in this space is very pioneering. You know, it's almost like a new type of fund that lives on chain. It's native on chain. It interacts with native Web3 asset classes, and eventually will also interact with traditional assets that are tokenized. And I feel like this is really, really big, but also really, really scary. And so it needs pioneers. And when I think about some of the pioneers in the space, I always think that there was always someone who was brave and you know, launched the first ETF or launched the first commodity fund, and I hope one day launch the first big melon fund. We're actually already starting to see that, but we're not seeing it in a public, you know, in your face way yet. And I guess I would want to tap into maybe, I don't know, John Bogle, who pioneered ETFs, and just say like, what was it like then? You know, you came up with this concept, and, you know, people used to laugh at him. People used to say like, this is an uninvestable asset class. What are you doing? And he didn't listen, and he just kept going and kept going. And, you know, now it's a multi-trillion-dollar market. So I think a lot of these pioneers who started investing in new asset classes early on, they were laughed at first, and they were ignored and they were dismissed. And I'd love to get inside their head and kind of compare notes and pitch to them and see what they think.
Excellent. Yeah, I think about that a lot too. Emanuel or Thomas?
Yeah, speaking about pioneers, actually, I was thinking, okay, who could I convince indeed to maybe to join forces and help this segment and push forward, actually. And thinking of that, I mean, actually, it's us as people, all the people that are here on the panel. So I thought, yeah, why not actually meeting myself earlier and telling myself to make the move earlier to the blockchain space, so that more energy is devoted actually to bring it forward. I kind of feel that when I joined, which is kind of, as I said, late 2017, early 2018, a lot of it was being done already. So I was happy to start on some ground, so to speak. But again, just yeah, maybe convince myself to join earlier and devote more energy even yet, and help more to that. Why not?
I have never heard that before. That's a great one.
That's a very good one. Well, I think it's a mix of us and the people we used to work for by the time we decided to come into that space. So if I look at the infrastructure I used to work for, knowing that they are slowly looking at the space, but extremely slowly. And I think 3 years ago, when I decided to make the move, they actually just issued an internal paper saying that they would kind of refrain any clients to get involved into the space. And I think just moving from not issuing those type of piece of paper and actually just contemplating the possibility that it is kind of game changing. And we've been just discussing kind of the market infrastructure or some investment, which is, I think it's great, and it's basically where we spend most of our time. But I think response on Lebanon's situation is vastly more important to what blockchain can bring to the world. And Diginex also has like a blockchain solution arm where the guys are very active in ESG and impact, and what you see there is actually phenomenal. And I think if we could see like a pickup in adoption on that part of the blockchain impact, which is not kind of financial related, will probably bring more adoption on our side as well. So I think going that road is probably the most beneficial for everyone. Yeah.
Well, this has been one of the most fun panels I've ever moderated. So I think that pretty much does it for us today. I want to thank the audience for spending time with us. Again, all the contact information will be displayed as soon as we finish the panel. If you have any questions, please drop them in the chat and they'll be directed to the panelists, and everyone will be happy to get back to you. I would like to have a special thank you to flovtec, who hosted us today, and we'll also be having a recording of this on their YouTube channel. And thank you, panelists. It's been really very engaging 40 minutes. Thank you for your honesty. I'm really excited to see where this comes, and interested to see if anyone in the audience has connections to the Lebanese central banker, or John Bogle, or any of the other, or Emanuel in the Back to the Future like 5 years ago state. But thank you very much, everyone. It's been an absolute pleasure, and looking forward to a phenomenal second half of the year.
Thanks, B. Take care.
Thanks,
Thanks,
Bea. Bye.
Thanks, guys.
Thanks to all of you. Thank you.
Bye.